Thank you, everyone. It's nice to meet you all. My name is Mohannad Shennawy, and I'm leading the new products and innovations in CIT Vericash currently. I'm going to talk about some guidelines that banks or network managers can really benefit to establish a real profitable agency banking network in the country. To give you an overview about who we are, Vericash is a product of CIT Global, where we provide innovative software platform that enable a new ecosystem of collaborative mobile financial service to help the financial inclusion in emerging markets. We are coming from our parent company CIT Global, where we are a division of it, and we established more than 20 years ago in Canada, Toronto. We have different existent locations in UK, Egypt, South Africa, Saudi Arabia, UAE, Hong Kong, China, where we actually delivered successfully in more than 35 countries worldwide technology solutions on e-payment, e-integration, e-security, and mobile software. And we delivered that to really large client base, including banks, telecom operators, central banks, even mobile handset manufacturers as well. So we like been lucky to group a mix of expertise in these domains, where we have the experience in payment, experience in mobile development, and also the experience in integration. So returning back to the topic today, I know that a lot of people here, especially in Nigeria, are thinking about agency banking, and of course after the recent regulation of Central Bank of Nigeria. So there will be a lot of providers now in South America. We see also providers in Kenya who are very proud on how many agents they have in their network. So they built a real massive agency network in these markets. But what's the most important also, beside the reach of your distribution network, is actually we need to answer one simple question: what is the average profit per agent in your network? It really answers how sustainable your distribution network in the market now. So to start with this, we need to understand actually what is the agent business case. And it's not a single business case for any agent, but we need to understand that these agents need capital to start this business. The cost of liquidity is very high. The security concern and the cost of implementing some protections mechanisms inside the agent shop can really increase the cost on the agent, so he can protect himself from any robbery that can happen in his location. And there are some overheads to really introduce this service. These overheads can be a new staff, new educated employees that he needs to hire. This can be a new space in his shop in order to deliver these services. And also, the benefits are different from one agent to another one. So some some people think that agents are looking more for the commissions on the transactions of the agency banking, but really not all of them. Some of them are thinking about increasing the footfall on their locations so they can sell more of their core products as merchants. Some of them are looking for brand recognition, so they need to use your brand name as a bank. Beside their brand name, it can give them more advantage and more recognition in the community they are in. So this leads us to really introduce 5 key requirements towards wide-reaching and well-managed agency network in the market. The first one of them is the ability to build flexible agency hierarchy structure. If we look to the different strategies around the world now, we see providers who are mainly focused to recruit individuals so they can actually create more reach, especially in rural areas. Some of them are depending on distributors, and some of them are taking the strategy of partnership with a big retail group in this market. While this mix of strategies are actually having some different trade-offs. So for example, the individual can give me the reach, but the retailer cannot. But when it comes to the readiness of the agent to really go to market and start this business, it comes the other way. The retailers are highly ready for such a service, but individuals may need a significant training efforts. So this leads us that the control as a service provider on the different agents types in your network will be varied. For individuals, the control on the individual will be low, while on retailer groups types, it can be high, but the risk for the individual will be high and low toward the retailer types. And this actually gives you a recommendation to build a mixed strategy around all these type of agents. Don't rely on one type. It depends actually on the market situation, your competition position in the market. You need to delegate some responsibilities inside your hierarchy to entities like agent aggregators, super agents, network managers, to really take you off very quickly. You need also to maintain the influence over your network. This means that you need more control about the channel and the technology that the agent is using. You need to make sure your brand is really recognized at the agent, at the way that keeps the trust in this brand in the eyes of your consumers. Well, when it comes to the services, agency banking is not only about providing cash in and cash out services at the agent. Well, agent actually can help in another services as well. So one of them is what we call transmitting information services. So someone can go to the agent and ask for a bank statement, for example. We can check for his balance. So these kind of services is also can be performed by the agents. Processing informations, as I told you, if you want to open a new account, either it's a bank account or a mobile money account for this consumer, so you need to go through certain processes for processing this information. You may need stamps at the agent side, you may need a photocopier, you may need some innovative technology that can help in the KYC process, and we see a lot of vendors here are providing some smart point of sale or mobile point of sale devices that can help on this aspect. And of course, the cash handling, which the cash in and cash out, and any electronic fund transfer, which spans services like remittance for the cash-oriented consumer, or bill payments, or alike services. So the recommendation is to target all consumer segments. So it's not only about your banked customers. You need to design services also for your mobile money subscribers if you have a mobile money offering as well, and also services for the cash lovers, as we see the most of the cases here in Nigeria, for example. You need to make sure that the transaction is a real-time transaction. There is no delay in depositing or withdrawing cash from accounts. You need to design new services and products that really suits these kind of segments. You need to unify your agent channel if you are a mobile money provider as well. So if the bank has established an agency network for the mobile money services, it's good to unify the channel to the agent so you don't confuse him with different channels and different applications. You need to make sure of having a cost-effective and KYC compliant front-end channel for the agent, especially for the processing information services. So where is the money actually in agency banking? Well, people think about that the bank will be very happy about, performing some cash in and cash out to his consumers, especially the ones who don't want to serve them in the branch because the cost of the transaction at the branch is very high. So there is a bank savings on transaction cost, but also there are some transaction fees that the bank can benefit from it. So either they are in a cash in, cash out, bill payments, electronic fund transfer, some other value-added services like insurance. These kind also of services can increase the revenue. Also loan and saving products can actually be the biggest revenue stream, especially for banks. So this is very important to really understand where is the money actually in agency banking. Is it around the bank? I will try to increase my mobile money subscribers, for example, or I am happy to serve, this is what I call unbanked or cash lovers, who will not love to open a bank account or a mobile money account. They are happy with doing cash. They want to go to the agents and do bill payments, do local remittance at the agents. And actually, it's the high revenues are going through these kind of segments. So how do you actually stimulate the service users? We spoke about design new revenue generated services, and we see a lot of people here in the conference spoke about different value-added services like micro-insurance or microfinance products in general, which you can actually design new revenue for the service provider. But also you can tie the service usage to a certain loyalty or a benefit program. And it will be very helpful that this loyalty or benefit program can be tied to the supply chain members themselves. This means that if my retailer in my distribution network, if I can tie the agency banking service to his loyalty program, this can add benefits for your consumer and also for your partner in this service. Also, stimulating the service usage by designing new services that can overcome some of the challenges that you may find. So sometimes in rural areas, the rate of cash outs are higher than the rate of cash in. So you may face some liquidity issues, liquidity problems to support those kind of agents there. So designing new innovative services which encourage the cash in to these agents, like rotating savings programs, insurance programs into these rural areas, will ensure that there will be some balance between the cash in and cash out, especially in rural areas. And here's, I think, my last two slides is what exactly the effective approach for rapid expansion. Well, if I have a bank, okay, I think that the logic start to provide agency banking service in the market is to partner or look for independent agency network owners. These kind of entities, like a retail group who really own their branches and the locations, who actually pay the salaries for their agents in these locations, they own actually the agency network. So you will have more control and more time to market when you actually target these kind of entities. Also, it's very important to link to the local switch or to at least maintain a interoperability situation in the market. So you benefit from other players who are bringing agents as well, because the regulator will ask you to really make your agents can do any cash in or cash out to any bank account in the country. So you need also to connect to your local switch to ensure interoperability, to ensure that there are a stream of cash in and cash out comes from agents outside your network. You need to delegate responsibilities and rules for agency recruitment companies who can help you actually enroll agents to the system. You need to capitalize on your assets or partnership with some entities, like, for example, SMEs, to ensure or to provide salary distribution services, with billers to provide bill payments, with microfinance institutions to provide microfinance products as well. And try to take advantage of the existing MMOs who are not banks. These entities are already invested in building their agency network. So instead of going to the individual agents of these MMOs, try to have a partnership with those entities, and they will be, I think, a win-win situation for both of you, because they can have a role of being a network manager of these agents, and also you can support him with his services if you have another agents with another provider as well. MNOs have the same situations. So imagine that all these entities are actually provided to you in one network management hub. So in one link to this hub, you get all the access to these entities. And I think in the near future, many entities, many companies will come to Nigeria to play this role, to be the network management hub to many banks who wants to join the market very quickly without putting more efforts on building the agency network. But the most important part for this bank is to ensure when he link to these network management hubs that he can monitor, he can learn, he can adapt his distribution network, and he can have the right influence on the agents by commissions and by incentives. So, some key facts before I finish. Agents are not the same, actually. They are segments with different business cases. It takes time and effort to build an agent network. The agent training and fraud monitoring must be continuous. One final advice is to outsource some rules and responsibilities, but don't lose the influence, don't lose the control. Thank you so much.